I don't think the regulators will allow staking in this first round, if they allow the first round at all. Now, we and one other firm will see our final deadline in May. If they reject our filings, then we'll have to refile. But my guess is they will move more now to a first come, first serve when this next round goes through. So if it's May, it'll be without staking. If it's later, there's a better chance for staking. If it's in, I would say 2025, because I think legislators and legislation is starting to get involved here and taking it away from simply the regulators.
Hey, Kathy, I don't want to leave without asking you, it is International Women's Day, and I think about your path. Tim and I have been talking a lot to many women who have made their way in male-dominated fields, and I'm just curious how you think about your trajectory from where you started and what you've achieved. You started 2 firms or helped co-found one and started your own firm. How you think about that path and what is top of mind in terms of those other individuals and other women that are out there that are maybe trying to do the same.
Yes, well, I think the most important thing in early years is to make your own bosses look brilliant because younger people coming into the business know so much more about technology and where the world is going almost innately than, shall I say, more seasoned investors. So just make your bosses look brilliant and educate them and, generate enthusiasm, excitement, energy around ideas. And make sure you have good mentors. If they're not giving you a good shot after you've made them look brilliant, time to move on. So that's one thing. As far as starting a business, I would say make sure there's an unmet need. In our case, in the case of ARC, what we saw was the traditional world going more passive or benchmark sensitive. When we saw an explosion of innovation, thanks to the 5 major innovation platforms around which we have centered our research and investing. And so I said to myself, someone has to do this. And so we went off, and honestly, I think most people thought we would fail for a couple of reasons. One, we put a truly active, fully transparent equity portfolio inside an ETF wrapper. And that had not been done at scale at all. And no one, it was a passive world that we had entered. And then the second was we're benchmark agnostic. You can put us against any benchmark, and you're going to have to give us some time after the massive interest rate shock that we went through. And now we're on the other side and performing better as a result over the last year. But over time, these innovations are going to transform the world and create massive wealth with AI as back to that topic as the main catalyst. So we couldn't be more optimistic about innovation.
All right, going to leave it there. Kathy, as always, so appreciate all the time that you do give us. Have a great weekend. Kathy Wood, of course, the founder, CEO, and CIO of ARK Invest, joining us from Florida. Kathy, thank you.
Hey, let's go to Washington, D.C. now for a check of the latest world and national news, where you find Amy Morris in our 99.1 newsroom. Hey, Amy.
Hey, Tim. President Biden's campaign now looking to seize on any momentum from last night's State of the Union address. A travel blitz has begun, designed to grab voters' attention on his impending rematch with Donald Trump. Biden plans to visit 5 2024 swing states over the next week, starting with a trip to his birthplace of Pennsylvania today and a Saturday stop in Georgia, a traditional Republican bastion he narrowly won in 2020. His campaign will also launch a $30 million 6-week paid media effort, and they'll be hiring new staff and volunteers in swing states. The Republican National Committee, meanwhile, voted to install Donald Trump's handpicked chair, Michael Whatley, a North Carolina Republican who has echoed Trump's false theories of voter fraud. Lara Trump, his daughter-in-law, is expected to become co-chair. The move completes Trump's takeover of the Republican National Committee as he closes in on a 3rd straight presidential nomination. A United Airlines aircraft ran off the taxiway into a grassy area after landing in Houston today. It is the third time this week, something involving the airline's Boeing's planes. 160 passengers and 6 crew members were on board. When the plane veered off the runway onto the grass, nobody was hurt. And today is International Women's Day. Every March 8th is meant to be a celebration of the achievements of women. Global news 24 hours a day and whenever you want it with Bloomberg News Now. This is Bloomberg.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at a mixed market right now. It has been a volatile day. The Dow once again in the green. Dow Industrials up now by about 0.3%, higher now by 97 points, 3888 right now on the Dow Jones Industrial Average, 38,888. We've got the S&P down 12, a drop there of 0.2%, while NASDAQ lower by 98 for the NASDAQ Composite Index, down a drop of 0.6%. 10-year yield 4.08% with a 2-year now yielding 4.48%. Spot gold right now we've got gold trading higher, little change I should say on spot gold, up by about 0.8%, up $16 the ounce, higher at $21.76 the ounce. West Texas Intermediate crude oil down 1.2%. WTI 78 even a barrel. Cannot ignore Bitcoin today, was trading briefly above 70,000. Right now 68,704 on Bitcoin, up now by about just about 2%. So stocks are retreating with the S&P lower after a rally that drove the market to multiple records this year as traders weigh mixed jobs data. S&P down 10 right now, down 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. So we talked about the jobs report and the labor backdrop and the economic backdrop with Kathy Woods. Just to remind you, we've been hearing it from Charlie as well, that U.S. jobless rate climbing to a 2-year high in February last month, even as hiring remained healthy, pointing, though, Tim, to a cooler yet resilient labor market. That is kind of our world where we get kind of mixed data points or even mixed facets in one data report.
Okay, well, speaking of the data, it's worth pointing out, even if you've been paying attention to it all day, the numbers once more. Non-farm payrolls advanced 275,000 last month. It followed a combined 167,000 downward revision to the 2 prior months. Remember, economists surveyed by Bloomberg for this month were expecting 200,000 jobs to be added. The unemployment rate, Carol, did rise to 3.9%. Wage gains also slowed.
Right, so some of those wage pressures may be easing. Hey, listen, let's get more on what our next guest is seeing. Amy Glazer is back with us. She's Senior Vice President over at Deco, and she joins us from Florida. Hey, Amy, good to have you back with us. We got the monthly statistics. We talked to a lot of individuals. What are you seeing specifically on your end?
Another resilient report. It shows that folks are still hiring and there's still opportunity for job seekers out there. So I think, no surprises in February and probably looking at the same trend over the next couple of months.
Talk more about that.
Yeah, and wage. I'm curious about, because we saw wage gains slowing. Are you seeing also signs of that?
We are. This is something I think we've been talking about over the last couple of months, but it's finally starting to translate. We're seeing not only just wages start to cool a little bit, but also no more sign-on bonuses, huge retention bonuses, all those extra perks. Instead, employers are putting those perks in terms of flexibility. And that's really what we're seeing is driving this labor market right now from an employee perspective. They want flexibility. They want time off. They want a work-life balance. They want to be able to select their own schedules. So employers are able to offer that flexibility and keep wages more in line.
Is that something you see being a permanent shift in the labor market? I mean, I hate to use the word permanent because this is something that's certainly ever changing, but is this kind of a sea change in the way that employees and employers think about their relationship with one another?
Absolutely, I do. And in fact, by 2027, they're saying that the gig workforce is going to outpace the full-time workforce. So
outpace, meaning the total number of gig workers will be more than the total number of full-time workers?
Full-time workers, absolutely.
Wow. Hey, I want to talk a little bit about labor hoarding. Kathy Wood just talked about this with us. She said that her prediction for this year is that we're going to see less labor hoarding as the economy softens in the coming months. This concept of labor hoarding is one that I think is we're talking about post-pandemic kind of for the first time. Do you see that letting up at all? Is that something you see?
I would agree with Kathy. I think that will start to let up. We were talking about the Great Resignation for the last 2 years, and now we're on the Great Stay. So employees are choosing to remain at their job for stability.
Wow.
I want to go back to what you said about gig workers outpacing regular workers, because I think about the implications for that in terms of benefits, retirement. We had a guest this week that we were talking about how most Americans are not ready for retirement, not even close, and what's going to be the costs of that. But I do think about what are the implications of more gig workers versus full-time workers.
It's definitely interesting to think about, Carolyn. For the first time in U.S. history, we have 5 different generations in the workforce. So I think about my 19-year-old son, who doesn't want a 40-hour work week. He doesn't want, that steady income. He just wants the money when he wants it. And we're seeing that in some of the generational trends. So I think it's going to continue to evolve over the course of the next dozen years. We're in this peak 65 phenomenon right now, where over 12,000 Americans are turning 65 every single day, which is also creating opportunity as they retire. More jobs are opening up. So I think we're going to continue to see a lot of fluidity within this market.
But Amy, what are you hearing from your clients that give you the indication that we'll have more gig workers? Are they saying, listen, we're tired of paying all the overhead of a full-time worker? Is that some of what's going on?
That's not what's driving it. What's really, truly driving it is the need for a stable workforce in terms of people showing up on time, productivity outpacing today. And they're really seeing that that's what the employee wants. They want that part-time schedule, and they need to be able to plan their work accordingly. So as technology continues to advance, it's enabling employers to reach workers that they haven't reached before and basically plan for any attendance or attrition anomalies.
Okay, so let's talk big picture about technology and the way that you think it will implicate employees in being able to actually not have to do what they were doing before. We had a big story this week that we talked about on the Bloomberg terminal, all about the demographic shift in the U.S. And you mentioned 12,000 people turning 65 each day right now. A lot of those people are leaving the workforce. We're not having kids at the same rate, younger generations these days, as older generations were. We're not creating this path for newly arrived people to the country to become citizens or to work. And it's creating this sort of delta where employers can't necessarily get the workers that they're looking for. I mean, there's still more than 8 million jobs out there that are not filled right now.
Right.
Do you see this getting better because of technology? Or is there a fundamental thing that we have to do in our society to make it so it's an easier pathway for people to start working in this country?
I think it's an interesting question. And I do believe, there's some sense of concern and fear about AI and technology and how it's going to impact the workforce. But I think that's also going to provide opportunity to ease some of the fear out there as we look to make up for those 12,000 a day 65ers that are going to be looking to retire. Time will only tell, but I see positivity in it.
Sounds like you see the glass half full. Correct me if I'm wrong. But we like to talk to you because in addition to the government statistics, we get some insight in terms of what is going on in terms of today's workforce and the workforce to come. I think about the Bloomberg audience. We just talked to Kathy. We wanted to understand, Kathy Wood, the macro environment, because that certainly plays into maybe what companies are doing and companies that publicly held companies are doing, and maybe gives us an indication about the outlook. So having said that, what is the smart narrative for you when it comes to the labor force today, especially when I think about some of the big publicly held companies?
Our clients are feeling a little bit of relief and excitement that the wage pressures have finally started to cool, which should enable them to carry off and have a great financial year. So
you mean like maintain margins?
Absolutely, absolutely. So I think this is the first time that our clients are feeling that sense of relief. They're also curious about how this gig workforce is gonna be able to impact them. It means they have to change the way they do work. So that's always top of mind to every single customer I'm talking to.
What do you mean by change the way they do work? What do you mean by that?
They're going to have to embrace new technologies that allow them to have scheduling flexibility and be able to accommodate that on-demand workforce.
Do employers want that, or is it not consistent enough?
It's not consistent. The employers that are getting it right and trying to decide how they're best going to accommodate their future are open to it. So I think those are the ones that are really going to excel over the next couple of years.
I think that, Carol, one thing that's interesting about that is, I think from the benefits perspective of that, when you're a gig worker, you don't have the same benefits that a full-time employee has. Not so good for the employee, but for the employer, it offers more flexibility.
Well, and I just think about the cost to individuals, society at large, between healthcare and that overhead of an employee.
This is a country where our benefits, our healthcare is tied to where we work.
Things we're thinking about. All right, Amy Glazer, Senior VP over at Adecco. Thank you so much. Really appreciate it. Coming up next, our One More Thing.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pella. We got Gap shares right now higher by 5.5%. Gap reported fourth quarter earnings that exceeded expectations, a sign that efforts to turn around the storied apparel retailer are bearing fruit. Now, these results come about 6 months into the tenure of CEO Richard Dixon, who was selected to turn the company around after years of abrupt management shifts and inventory mismanagement. Again, Gap shares right now, they're up by just about 5.4%. Costco shares are retreating today after the warehouse club chain reported second quarter revenue and gross margin that did not meet consensus expectations. While analysts found the print to be strong, Citigroup said it is hard to see catalysts that can drive Costco shares higher. Costco right now down by 7.4%. Eli Lilly shares are trading lower today. Lilly's Alzheimer's disease drug faces further regulators planning to hold a hearing of external advisors to explore how safe the therapy is and how well it works. Lilly down today by 1.7%. Broadcom is predicting that AI spending will fuel growth more quickly than expected this year. Even as sluggish demand in other areas weighs on semiconductor sales, the company's semiconductor division posted revenue of $7.39 billion in the fiscal first quarter, missing the $7.7 billion that had been projected by analysts. Broadcom today lower by 5.2%. And United Health Group services are starting to be restored more than 2 weeks after a cyber attack on its Change Health subsidiary snarled the American health system. And those are our top company stories at this hour, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week on this Friday, March 8th. Let's get a check on the latest world and national news. For that, we go to Amy Morris in our 9 a.m. newsroom in D.C. Hey, Amy.
Hey, Tim, the 7 swing states that are most likely to decide the 2024 presidential election also are facing more economic misery than the rest of the U.S. That's adding an obstacle to President Biden's re-election campaign. The Bloomberg Economics Misery 2 Index is an analysis of inflation rates over 4 years, and it adds in the latest unemployment rate. It's higher in the battleground states of Arizona, Georgia, Michigan, Nevada, North Carolina, Pennsylvania, and Wisconsin. President Biden, meanwhile, did lay out his vision for the nation as he heads into another general election campaign, opening his third State of the Union address last night, warning of the threats to democracy, both at home and abroad, citing the war in Ukraine and January 6th rioters. He never mentioned his political rival Donald Trump by name, referring to him as his predecessor. He also accused him of running a campaign of revenge and retribution. Donald Trump secured a $91.6 million bond to delay executing the verdict in the defamation lawsuit against him while he appeals. He also filed a notice of appeal in the case. He's asked the court to put that defamation verdict on hold. Now, the third-party presidential movement, No Labels, has decided to field a presidential candidate in the 2024 election. No Labels is not expected to name that presidential and vice presidential ticket later today. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Carol and Tim.
All right, Amy Morris, thank you so much. Let's get to our one more thing this hour before we wrap up. And this is just popped onto the most read list in the past 60 minutes on the Bloomberg
We were going to
terminal.
talk about spring break.
We will later on, we promise. That is also a most read story on the Bloomberg. But this one has to do with Novo Nordisk's Wegovy winning U.S. approval as a treatment to reduce the risk of heart attacks and strokes. We've talked about this with our Madison Muller about how these drugs, a lot of conversations about using them to treat a bunch of ailments, serious ones.
Right, and this is a big deal because it's the first time that a weight loss medication has also been approved to prevent life-threatening cardiovascular events. That's according to a statement from the FDA today. The expanded label may also help persuade insurers to cover the drug more widely, which has been something else, Carol, that we've talked about a lot, given the high cost of using this medication.
Right, exactly. I will point out the ADRs, they're up more than 30% this year. They are seeing some selling pressure. Another story on the Bloomberg has to do with the company's CEO saying that he expects the price of Wegovy to drop as more patients get access to the treatment via insurers and healthcare systems. So he says paving the way for broader use, but you do wonder about if it's at a lower price point, what that means in terms of margin. So maybe some pressure because of that.
Yeah, like you said, shares ADRs of Novo Nordisk down about 2% right now. The company's CEO did describe this ripple effect of healthcare systems initially treating people with the highest BMIs, and then most accompanying ailments at a higher price. Then as Novo scales up its manufacturing and medical systems, expanding access to more people, prices will then fall.
Right, you can assume as they scale up that the price of it will come down somewhat. Anyway, another name that we're watching, and it is definitely among the most read, and as we said, we'll get into spring break a little bit later on.
Yeah, even though we're not doing anything for spring break.
No, we'll be here. We'll be here for spring break. All right, for those of you watching on TV, don't forget the close is coming your way in just a moment. For those who are watching and listening Bloomberg Business Week on radio, YouTube, and Bloomberg Originals, we are going to stay on that jobs report, continuing to think about that, and really kind of spin it forward, Tim, in terms of that inflation print. That's our focal point. That's next week.
Yeah, plus on this International Women's Day, we're going to check in with the woman who nearly 40 years ago created the first diversity role at Accenture. Also, we're going to talk to Heather Spilsbury, the COO at 50/50 Women on Boards, on how we're doing when it comes to that front. Hint, still a lot of room for improvement.
Still work to go. David Weston's going to stop by, too, with a preview of Wall Street Week, and then we will talk spring break. That'll do it for us. This is Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
All right, everybody, we are just 1 hour away from the closing bell. Bloomberg Business Week continuing on radio, on YouTube, and Bloomberg Originals. You know, earlier in the day, we hit a record on the NASDAQ 100 and also the S&P 500, but that rally that we saw earlier in the day definitely ran out of steam here.
Yeah, the S&P 500 down about 0.2%. The NASDAQ Composite down about 0.6%. The Dow up to 0.3%. And Carol, I do want to always check the NASDAQ 100, which right now is down about 0.9%.
Yeah, exactly. So seeing some selling here later in the day. All right, we're going to talk about that. We're going to talk about the jobs report a little bit more, but also spin it forward to next week's CPI report, because that's what everybody says. That's what's going to matter. That's what's going to be on the Fed's mind. They continue to be very vigilant when it comes to inflation.
We've spent a lot of time this week talking demographics. One thing that's happening is this great wealth transfer from baby boomers to younger generations. One firm says it's up to $70 trillion.
That's a lot.
That's a lot of money. We're going to do a demographic spin on this, though, and talk about why it's important to focus on how much women are getting and what they're doing with that money.
Yeah, love that angle. We're also going to check in with the woman who nearly 40 years ago created the first diversity role at Accenture. 40 years ago. So how far we've come, how much more we have to do on that front.
Also, what's coming up on Wall Street Week? We're going to check in with David Weston. And Carol, don't forget about the clocks this weekend.
It's that time of the year.
So spring forward, which means we get less sleep.
Right,
So that's not the fun one.
It's always a bummer.
Okay, that's a bummer. What's not a bummer is spring break, unless you're going to Miami Beach.
Right,
Then it's a bummer.
exactly.
Because you got to be on your best
Miami Beach,
behavior.
guys, has a message for everyone, so we're going to get into that. This is a most read story on the Bloomberg. All right, first up, let's get a check on that trade. Definitely off our highs of this session when it comes to equities. Here is, once again, Charlie Pellet.
Thank you very much, Carol and Tim. Indeed, totally mixed market right now, with the Dow Jones Industrial Average pushing higher by 113 points, up 0.3%. The S&P, NASDAQ 100 index, they are all in the red. 58 minutes to go ahead of the closing bell. Right now, we have got the S&P lower by 8, drop right now of 0.2%. Dow Industrials up 109, up 0.3. The NASDAQ Composite Index down 81, a drop there of 0.5%. 10-year 4.08%, with a 2-year that's yielding 4.48%. Stocks lost steam after a rally that drove the market to multiple records this year. Traders also weighing mixed jobs data. Should point out the S&P, as of right now, is on track for a losing week. We've got spot gold up 0.8%, 21.76 the ounce. Crude is down 1.3%, 77.91 a barrel. And Bitcoin, after trading briefly above 70,000, Bitcoin 69,308 right now, higher by 2.9%. So what about the overall market backdrop, specifically tech valuations. Kathy Wood is the Chief Investment Officer of ARK Investment. She just had a wide-ranging interview right here on Bloomberg Business Week.
We do not believe we are in a bubble anything like we were in the late 90s. I was there, and the technologies weren't ready, the costs were too high, too much capital, chased too few opportunities too soon. The seeds for what is happening now were planted during the 20 years that ended in the tech and telecom bubble, and they've been germinating for 25 or 30 years. So we believe we're ready for prime time.
And you can hear more of the conversation with Kathy Wood on the Bloomberg Business Week podcast. Briefly, BlackRock is going to acquire SpiderRock Advisors, a Chicago-based asset management and technology firm, to provide personalized investing strategies to wealth management clients. BlackRock shares up today by about 1%. Recapping, S&P down 8, down 0.2. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You probably have it memorized by now, but this is what we like to do, remind you of one of our top stories of the day, and this has to do with the monthly jobs report that came out at 8:30 a.m. Eastern, Wall Street time this morning. Jobless rate here in the United States climbed to a 2-year high in the month of February, even as hiring remained healthy, pointing to a cooler yet resilient labor market, Tim.
Okay, non-farm payrolls advancing 275,000 last month. It surpassed the average analyst estimate of 200,000. The unemployment rate rose to 3.9%. Wage gains slowed. Carol, the report illustrates a labor market that's gradually downshifting, more moderate job and pay gains that suggest the economy will keep expanding without much risk of a reacceleration in inflation. In other words, if you're Fed Chair Jay Powell, you like seeing a report like this.
You got some room to play with.
I think some might call it Goldilocks.
Don't you dare.
I won't.
All right.
So I said some might.
Some might.
I'm not
some
going
might.
to.
Let's see what Anna Wong says about all of this. She's chief U.S. economist for Bloomberg Economics. She's out there in our Washington, D.C. bureau. Anna, good to have you here with us. Can we use the word, it's funny, I was having this conversation with Mike McKee in the newsroom. Can I say soft landing? Can I say Goldilocks? Like, what is the correct term? How would you describe it?
Yeah, I think, Goldilocks would be a right word. And we have been having Goldilocks report for probably several months in a row. In terms of soft landing, I think the bar is much higher because you do need to finish with all the revisions in the job data, which will take place. A lot of the 2023 revisions will take place in early 2025. So I think it's too soon for a soft landing call.
Okay, well, you and the team have a great note out after this report came. And you write that today's data suggests the labor market is less tight than the headline numbers actually indicate, and that the labor market will cool quickly. So the Fed's actually going to cut in May, earlier than the market expects. We're seeing the market betting on June right now. Make your case to us, make your case to our audience, Anna, that things are softer than they appear.
Yeah, we have seen a host of labor market data other than a non-farm payroll report before this. So we have Conference Board. There's the indicator in there that's called jobs plentiful versus jobs hard to get. And the difference between those has tracked the longer-term payroll report very well. And that has actually deteriorated in the past month. And adding to that, Powell himself has told us that he loves anecdotes, right? And an anecdote that's most important for the Fed are these regional surveys anecdotes. So all the regional district presidents talk to business contacts in the districts, and what those anecdotes says is that the current employment conditions is downshifting. It's all trending down. So I think the non-farm payroll number and also the jobless claims are actually the aberration from what the totality of labor market data is saying, which is more downshifting.
Which can we make the jump, make the assumption to maybe it's next month or this month's read, or maybe it's April's read, that we're going to continue to see some softness when it comes to labor data?
Yeah, so a lot of these surveys also have a forward-looking component to it. For example, the small business optimism survey, which you will get next week, has a 3-month look ahead, and those are all saying that in springtime, hiring is supposed to come down. So I would think that yes, to your question, Carol, that the reports in the next couple of months should be softer.
So, do you think it's fair to say that we're going to avoid a recession in the near future. Are you ready to make that call? I know you said the bar is higher for a soft landing at this point, Anna, but
Yeah.
is it fair to say that given the economic data that we have, what we've seen from on the jobs front and what we continue to see, we're going to avoid a recession this year?
No, because and I think the clearest way to visualize this is to look at the time series of unemployment rate. So we have been ticking up. The low of last year is 3.4%, and today we saw it's 3.9%. And typically, when the unemployment rate is on a 3-month moving average 0.5% higher than the minimum, that's when you have a recession. So suppose that next month we get 3.9% again, and it rises to 4% in April, then that rule will be triggered, and then you will have a recession in April. So I think, and also just looking at the unemployment rate, it doesn't stabilize. Once it starts turning, it just doesn't stabilize at a level. It just keeps going up, and we are in the early part of that.
All right, so then what does that mean for Fed rate cuts? Right now, traders expecting that first one to come in June. Do you think it could come even sooner then?
Yeah, it is so we think it's a very close call between June and May. We have two different models. One is an NLP textual analysis model based on Fed's rhetoric, and that is suggesting June cut. But then our forecast for labor market suggests that the labor market is weaker than what the consensus think it would be. And you have seen how quick Jay Powell would pivot to any signs of softening in the labor market. So if the labor market evolves as we foresee, which is climbing unemployment rate in the next two reports, that's why we think that Jay Powell and company will cut in May.
Hey, Anna, help us spin this forward and also make the connection to rates and if you can, to the equity market. We know the stock market is not the economy is not the stock market. But if you indeed think that there could still be a recession this year, what does our investing audience need to know about where the market could be going?
Yeah, I think right now, I mean, people have this sense of FOMO that you're missing out of a great rally in the stock market. But what we're seeing in the market response to economic data in the past few weeks is that it's super volatile. And in that, like the moment you have a weak data point, suddenly 10-year Treasury yields plunge by 10 bips. That was in response to the ISM survey last week. It's a massive move. So I think that investors should still continue to be cautious given this volatility in the bond and stock market.
All right, just very quickly, 30 seconds on CPI. That's our next focal point. What are we expecting? Are we going to see some softness?
We expect it will be better than the last one, just because used cars continue to come down, and that will be the key driver for disinflation in the rest of the year.
All right, great stuff. A run through all that we need to know when it comes to the U.S. economic picture. Anna Wong, thank you so much, Chief U.S. Economist at Bloomberg Economics there in D.C., our D.C. Bureau. You are listening and watching
in on how American companies are doing when it comes to gender diversity on their boards. Do you, Carol, have any guesses?
No, but I'm assuming if we've got any movement up or down, it's a little bit.
Yeah, hey, you're right.
Thanks. I didn't cheat. I didn't cheat.
So as of the end of last year, women hold 29.4% of the board seats in companies in the Russell 3000. It's a 1 percentage point increase from the year before. That data courtesy of the 50/50 Women on Boards. It's a nonprofit education and advocacy campaign that's working toward, in its own words, gender balance and diversity on corporate boards.
All right. We've got back with us to talk about this is Heather Spilsbury. She's Chief Operating Officer of 50/50 Women on Boards, joining us from Los Angeles. Heather, good to have you back with us. 50/50, right? That's the mission. So we're not quite there yet.
That's the goal. That's correct. We're not there yet. We're at 29.4, like you said. That's only a 1 percentage point increase from last year. And then our other goal is 20% women of color, and we're still not there yet either. Women of color only hold 7.7% of the board seats.
Help me out here. When I think of ESG, and Tim and I talk about it, ESG, the governance, it's an easy thing to measure the governance, particularly when it comes to corporate boards? Why haven't we moved further along on women representation and people, the folks that are Black that are more on, having more representation on the board?
Right, right. I think a lot of it has to do with the economy, and things that happen within political arenas to take place and take precedence over companies focusing on diversifying their boards. And what we talk about all the time, it's not an ESG or DE&I effort. While it is that, but it's more than that. It's really a business imperative for businesses to be more profitable and productive. And the data all shows that the companies with more diverse boards have a bigger market share.
We've been saying that for a long time.
But make that case, Heather. Bring the data here. Share that data with our audience, because I still think that, we're Bloomberg. We care about the data. That's what moves the needle. So what are the numbers that you have here?
So when you're looking at it from a sector perspective, oddly enough, the financial services sector and the energy sectors are the ones that still have 25% less women on boards. And that's unheard of at this point. It's below the national average. And then when you're looking at states, California and Washington lead with more than 30% women on boards, and Florida, Utah, and Nevada, if you haven't guessed, have the least amount with 25% women on boards. On another spectrum, like in good news, when women are in leadership, boards near gender parity. So if they hold a CEO role, nominating governance chair role, or chair of the board, the percentage of women on boards is near gender parity, and people of color are nearing 20% of those board seats, with women of color holding anywhere from 14% to 17% of the seats.
All right, so we're going to come over there, and that guy that's talking over you, we're going to just kind of talk him down, man, because this is, it's International Women's Day. We get one day. Just tell him to pipe down over there.
It is.
All right, so Heather, I do think about, listen, I joke, but it's serious. I mean, my whole career, we've been talking about more representation, and the importance of diversification, whether it's people of color, whether it's women, you name it. It's important. It pays off financially for companies. If there was one thing that you think that companies could do to push the needle even further, what would it be?
It's to add one woman to their board. It's really about, sponsorship, sponsoring women, ensuring that you have support there for your women employees and you're moving them up in the ranks into leadership positions. Looking at qualified candidates outside of your immediate network is also a big part of it. People tend to tap people on the shoulder that they know, but you really, you have to look outside of that. So whether you're using a recruiter or whether you're asking your board to also take part in the search, it's really important to go outside of that immediate network and to look for qualified women candidates, which is why we started 50 Women to Watch for boards.
Well, I want to hear, Heather, about when you go to boards or when you speak to people who are the decision makers in these companies, and you tell them, hey, you got to have more diversity on your board. What's the response that they give you? Like, is it like, we'd love to, but what?
I think, and in some cases too, board succession planning is not an easy thing, especially for public companies. So I think part of it is the length of time that it really takes to find the right candidate. So even for large nonprofits, that could take anywhere from 1 to 2 years to find the right candidate to fill the role, to have the expertise, to fit with the culture, et cetera, et cetera. So those are some of the things we hear in terms of board succession planning. There are some companies that just don't want to add women. I will tell you that. I'll just be honest. But the companies that have 2 women on their board have started. They just need to continue doing that by adding additional ones so they can get to that gender parity piece. So for us, it's education. It's educating women on how to pursue that seat, and it's educating companies on why it's so important to have women in those seats.
All right, just tell the guy next to you that it's hard enough, we women. We have to do it in heels. We have to dance backwards, and it's really rough when we have to be heard talk over somebody. Your information was...
luckily we can keep talking without noticing.
You are welcome anytime, because the data that you laid out, so specific, really paints the picture of what's going on and what needs to be done. And you've been watching it for a while now, so we really appreciate it in getting you here. So you are welcome back anytime.
And can I just say one more thing?
Please.
With 50 Women to Watch for Boards, we launched it last year. I know we had a conversation last year. 5 of those women have already secured public company board seats, and we just launched it again today on International Women's Day. So if you're a woman and you're ready for a public company board, please apply. But the goal is to get those women on boards to continue moving the needle and making an impact.
Because they're out there, right? It's
They're
not
out
the case
there.
that they're
They
not out there.
exist. They're on our website if you need a list.
All right, Heather, really appreciate it having you join us here. Have a great weekend. Heather Spilsbury, she's Chief Operating Officer of 50/50 Women on Boards, joining us from Los Angeles. Love it, love what she had to say, the specificity. I really mean that. Great information, but it really was kind of ironic and funny to be like, here we are.
I did promise, Carol,
Yes.
that I would not Tim-splain anything today.
No Tim-splaining
No
today.
Tim-splaining
I get one
today.
day.
Yeah,
I
one
get
day.
one
That's
day,
it.
which I really appreciate. You actually are pretty good about it.
Pretty good.
Other people, not so much. All right, this is Bloomberg Business Week.
It's 3:21 on Wall Street. We do check markets all day long at Bloomberg. We are looking at a mixed market right now with the Dow Jones Industrial Average moving higher. The S&P, NASDAQ, they are both trading lower. Right now we got the S&P down 20, decline now of 0.4%. Dow Jones Industrial Average up 19, higher now by less than 0.1%. A little changed on the Dow. We've got NASDAQ down 132, a drop there of 0.8%. Stocks lost steam after a rally that drove the market to multiple records this year. Traders also weighing mixed jobs data, 10-year at 4.08% with a 2-year 4.48%. Spot gold today up 0.8%, 21.77 the ounce, while West Texas Intermediate crude down 1.2%, 77.92 a barrel. The jobless rate did climb to a 2-year high in February, even as hiring remained healthy, pointing to a cooler yet resilient labor market. Michelle Meyer is chief economist at MasterCard Advisors. She told us she does see these job gains continuing.
If you look at the data, it's fairly broad-based. It's not the case that it's just concentrated in one sector, which to me tells us that it can continue.
And you can hear more of that conversation on the Surveillance podcast. Gap shares are higher after earnings. Gap up 5.7%. It reported fourth quarter results that exceeded expectations, a sign that efforts to turn the storied apparel retailer around are bearing fruit. Again, Gap shares up now by 5.8%. Recapping stocks lower, S&P down 22, dropped there of 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. Well, we've talked in the past about the largest transfer of money in U.S. history. It's the so-called Great Wealth Transfer, the wealth that's set to be passed from boomers to their children over the next 2 decades. More than $70 trillion. That's according to the financial services firm Cerulli Associates.
That's a lot of money, right? We talked about this earlier. And you think about the implications, some broad implications for families, the taxes they pay, the charities they donate to, and more. Really a lot of impact.
It's almost like there's an entire industry around this because it's so much money.
There is.
There is, okay. Well, our next guest actually argues that when it comes to this wealth transfer, we need to focus on the implications specifically for women. We've got Tracy Bell with us. She's Director of Equity Strategies at First Horizon Bank, joining us from Birmingham, Alabama this afternoon. Tracy, good to have you with us. How are you?
I'm doing great, Tim. It's nice to be with you.
Nice to have you with us. So there's some really interesting data in the notes that you sent along. It's not just the fact that women tend to live longer than men and why we need to think about the implications of this wealth transfer for women. So there will be women living, more women, single women later in life. Who need to support themselves. But also, you point out that in younger generations, there's a higher number of single women in the millennial generation, my generation. Talk to us a little bit about the demographics here.
Yeah, so you've cited those statistics perfectly. So this is happening in 2 areas. There's the baby boomer wealth transfer from unfortunately deceased spouses to their wives, but then that money will eventually trickle down and will be inherited by the millennial generation. And in that generation, the median age for women to marry in that generation is around 28, which is different from a median age of 22 in 1980. So that means that these ladies are more independent and financially savvy for longer before they enter into relationships. And they're also more educated. So 44% of bachelor's degrees or higher have been earned by this generation, as opposed to 21% in 1980. So they have a very different financial profile than some of the older generation.
Hey, what does it mean for a firm like yourself? And I think about this many moons ago, earlier in my career, I remember a well-known voice on Wall Street saying, you know, when I'm managing money for a couple, I actually want to make sure that I'm meeting with the wife because in the long run, I'm going to end up talking with the wife. And I want to make sure that she's comfortable with me and we're on the same page. So I'm curious what that means. Are you bringing in more women financial advisors because that's what women want? Or I don't know. Like, I'm just curious how that affects the dynamics of how you guys kind of run the business that you do.
Well, part of what we do now is be sure that we do focus on making sure the wife in the relationship or the female partner in the relationship is part of the conversation. And this is different by demographics as well. You know, within the baby boom generation, that's a little more of a challenge and you have to make more of an effort. Within the younger generation is already more involved. So that's less of an effort there to make sure that you have both parties involved in the conversation. But it's a well-known fact in the financial industry that after a spouse passes away, there's a really high chance that the female surviving spouse will change their relationship with their financial advisor within 1 year of their spouse passing away. So it's something that the industry has to really pay attention to.
Why does that happen?
You know, I think it's just a lack of communication. There's something that we see with women investors in particular. They want to be listened to. and they want to be listened to in a way that is educational and has the right tone in that communication. And they want advice. So one of the things we notice with women investors is they're not overconfident. They know what they know, but they also know what they don't know. And they really depend on the advice of a professional to fill that gap. They want a good team around them.
Huh, interesting.
Hey, I wanted to shift gears a little bit and talk about new businesses being formed, because we also understand that more than half of new businesses out there are being started by women. What does that mean for women who are inheriting money or for wealth being passed down through generations, and how the money ends up being used?
Yeah, so more than half of new businesses are started by women, and this likely is going to continue. And this wealth transfer will only help that. And not only will it help the numbers, but it will also help the financial stability and the launch of those businesses. So women that are having an increase in wealth will have longer that they can operate these businesses. They will be more well funded when they begin. And it really should only help in their success rate over time. And then women-owned businesses tend to hire more women, promote more women, and pay women better than non-women-owned businesses.
You know, one thing I want to ask you, and I'm curious about implications of the younger generation. We had a voice on earlier from Adecco, so they deal with employment needs, and they talked about growth in the gig economy, and that at some point they anticipate that the gig economy will be responsible for more than half of the jobs that are out there, so overshadowing full-time employment. And I do wonder what that means in terms of, okay, if you're a gig economy worker, you don't get kind of all the benefits, whether it's a 401k or, you know, and the like. And I do wonder, younger generation, maybe those who aren't inheriting wealth, how they are potentially thinking about, you know, their retirement needs, women in particular, the younger generation. Do they really care? Are they involved at this point, especially if they're not inheriting it? I just wonder how they're thinking about it.
You know, that's an interesting question. I think as people get older, they consider those things more, and maybe the gig economy is less attractive once people begin to consider those factors. Retirement savings for women is a very big deal, and it's a hurdle. So you have to think about the challenges that women face. Longer lifespans. So this is just a math problem, you know, longer lifespans. So you've got to save more money over time to fund yourself longer in retirement. That wage gap that is very well known. Women tend to earn less over their careers, so there's less money going in. And then women also tend to be more conservative in their investment choices. So making sure that you're investing aggressively enough to earn a higher enough return over time for your retirement savings to grow is also very important. And then there's a last factor. Women tend to have healthcare needs that are greater later in life, and that's expensive as well. So I think as people move through their career, if they've been in the gig economy, they might start thinking more about how they need that retirement, and maybe the gig economy doesn't stand up.
We've talked about demographics in the context of small business, but I'm also curious about where this money ends up going in terms of charity, nonprofits, that sort of thing. What does your research tell you about this money, when it is inherited, where it goes, how it's being spent?
So it's, again, well documented that women tend to give more of their money to charity, a greater percentage of their money to charity. They think about social and well-being outcomes. They think about community. And they also tend to give to charities that support women and girls. So that's an area where we may see a shift towards funding and financing in the nonprofit area, and women greater supporting those areas. As they start new businesses, they may also start new businesses that tend to focus in those areas. So the nonprofit area and charitable giving for women is a very big deal.
Hey, I do wonder as we get ready to wrap up here, Tracy, like what's the number one step for someone who may be listening and they know that, you know what, at some point I am going to inherit some wealth going forward, but I haven't been involved in terms of the money management in my partnership, or I don't know, I just haven't been involved in general. What's the first one step that they should take?
You know, one of the things that I say to groups of women when I'm speaking to them is this is something that you cannot outsource. you need to know what's going on in your financial life, whether it's you personally or involved in a relationship. You need to get the information together. You need to understand your numbers. Where are you now with your savings? Where do you need to be in 5, 10, 20, 25 plus years? And then map out a plan for getting there. There are countless financial advisors, financial planners, attorneys, CPAs that you can put together as a great team to work around you to help you figure out where you are today and then map that place going forward. So the first step is getting all your information together and understanding where you are.
All right, sounds like a smart plan. Hey, Tracy, thank you so much. Really appreciate it. Tracy Bell, Director of Equity Strategies at First Horizon Bank, joining us from Birmingham, Alabama on this International Women's Day.
We've spent so much time this week talking demographics.
We have, really, right? Are you like...
Oh, yeah, and I think it's like the biggest thing that is not being talked about right now.
I agree, and the impact that we're going to feel down the road, no doubt about it. All right, let's get a check on world and national news at this hour. Off to D.C. we go, back to D.C. we go, and Amy Morris. Hey, Amy.
Hey, Carol. The U.S. jobless rate climbed to a 2-year high in February, even as hiring remained healthy, pointing to a cooler but resilient labor market. U.S. Labor Secretary, the acting Labor Secretary, Julie Su, spoke with Anne-Marie Hordern on Bloomberg Television after that report came out.
The jobs numbers continue to be very strong. The 3-month average is actually 265,000. So, we look at trends as much as we look at monthly numbers. And on that, the unemployment rate remains under 4% for over 2 years now.
Acting U.S. Labor Secretary Julie Su says that is the longest stretch in 50 years. President Biden making his case for a second term during his State of the Union, frequently criticizing his predecessor, Donald Trump. Brown University political science professor Wendy Schiller tells Bloomberg the president managed to reach the right audience, and that's exactly what he needed to do.
He, in the end, had a very enthusiastic response from key players in the progressive wing of the Democratic Party. They stood up, they clapped, they looked happy with that speech. And that is absolutely essential for Biden just as a baseline to be a competitor and be competitive with Donald Trump in the 24 election.
Brown University political science professor Wendy Schiller. A ship carrying humanitarian aid is preparing to leave Cyprus and head for Gaza after international donors launched a sea corridor to alleviate a humanitarian crisis after 5 months of war. President Biden had said in last night's State of the Union that he ordered the U.S. military to create a temporary port on the Gaza coast, and he used his speech to call on Israel to let in more aid. But U.S. officials say that facility could take weeks to build. The European Union, along with its partners, including the U.S., are set to launch the aid corridor as soon as this weekend. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We who got the Dow, the S&P, NASDAQ, all trading in the red. 20 minutes to go ahead of the closing bell. Right now, let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks in the red amid a huge reversal in the semiconductor space. The Dow is currently down 35 points. S&P's dropped 29, while NASDAQ is off by 1.1%. The U.S. 10-year yield at 4.09%. Gold is up 16. Oil is in the red, but Bitcoin hit 70,000 for the first time. Among the main 11 S&P sectors, leaders were real estate and the utilities. Tech and consumer staples were under pressure, and leaders to the upside in the Dow, Apple and 3M, while Intel and Boeing led to the downside. In this semi-space, NVIDIA rose as much as 5.1% before falling as much as 4.8%, and after earnings, Broadcom fell 5%. Costco dropped by 7%. In other news, 3M's board approves the planned spinoff of the healthcare business. And wrapping things up, Biden says he will sign a TikTok bill if Congress passes it. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, to hear live breaking news over your Bloomberg. Type SQUAWK, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 18 minutes left in today's trading session, getting ready to wrap up the Friday trade and the week overall. We are seeing, as you just heard from Charlie, pretty much equities near their lows of this session. The NASDAQ 100, the biggest hit of the major equity averages here in the U.S., down about 1.4% here, Tim, as we said, with just about 18 minutes to go.
Hey, you know, Carol, I'm like always thinking about decliners.
Because you have to.
Because I have decliners. And oftentimes it's kind of tough in recent months because the market has been up so much to find good decliners.
A plethora today?
There's like a dozen stocks I want to do to the downside. I mean, you could do like all the chip companies now.
Yeah, which has been
Boeing
a change in the trade
today.
that we've seen.
Yeah, it is. It is totally a change in the trade.
And earlier today, NVIDIA, AMD, they were all atop the major equity averages.
Down.
Yeah, they're down.
Yeah, well, so makes a market. Hey, that's why we want to talk to Kelly Kowalski, portfolio manager at Mass Mutual, joining us from Boston this afternoon for our drive to the close. Kelly, I want to start with the jobs report because that's what we got earlier today. We've been talking about it throughout the day today. Unemployment rate ticking a little bit higher. We're seeing wage growth move up, but not as quickly. And then we're also seeing more jobs added than economists expected. Your big takeaways about what it means for the economy?
Well, thanks, Tim and Carol, for having me today. I think the jobs report today was a bit of a mixed bag. Although the headline beat, we saw that about 1/3, a little bit more, of January payrolls were just revised away. And if we look at some of the underlying data in the February numbers, about half of the job gains came from education, healthcare, and government, so your more non-cyclical sectors. I do think this still fits it within the market's soft landing narrative, and it is Fed friendly. So we really have to balance looking for that inflation progress with how's the health of the underlying economy.
How easy is it to be a portfolio manager today? In this
it is not easy.
You looking for a new job?
This has nothing to do with being a woman or anything like that. And that's not what I'm getting into. But in this environment, how tough is it?
It is tough in this environment, especially because we focus on credit. So as credit investors, we think markets are kind of priced for perfection right here. Mm-hmm. We really look at spreads as a measure of stress or risk in the market, and they are very tight. They wouldn't tell you that there is any sort of risk of downside or a recession. So when we're trying to really maximize spread in this type of environment, it's challenging.
You know, it's funny, one of our most read stories on the Bloomberg, credit markets are acting like easy money era never ended. And they talk about the riskiest global debt is outgunning safer fixed income assets, investor euphoria harking back to the days before central bank rate cuts. Does that sound fair to you, that assessment?
Well, I think that there is a lot of positive sentiment, and certainly within the investment grade market, we saw the busiest February issuance on record. I don't think we're seeing the level of aggressive lending that we saw in 2021, for example. But it is a tough market, and I think that again, if you look at sort of high yield where you have more risk, spreads are below their 10th percentile historically. So there isn't a lot of sort of downside or negative sentiment really being priced in at all.
Right, spreads between junk bond yields and investment grade counterparts are tight. So it's interesting. So I think about all of that we got from Jay Powell this week, and like whether he likes it or not, right? It continues though to be an environment where companies of almost all stripes can access funding. Is that safe to say?
That's the current environment right now. And I think that, we've seen financial conditions actually ease over the past several months. So when the Fed is thinking about, hey, do we need to cut? That's one of the things that they're looking about right now and really saying, I don't know if there's that much urgency now. If you look at capital markets are functioning fairly well.
Yeah, right. Which is good. But all right. So for someone who does have to focus on credit, where do you allocate if you've got some new money to put to work?
So over 90% of our long-term bond portfolio is in investment-grade bonds. I did mention spreads, which is what we look at, but all-in yields, on a historical basis, aren't that bad if you're locking in, a little over 5%, for example, on a 7-year duration corporate. We do like staying high quality here, just because we are sort of a little bit, focused on the downside, thinking about the risks. But we think high quality fixed income, and we also, don't think cash is a bad placeholder right here to have some dry powder for opportunities.
How much in cash, and how much is it compared to what you guys usually do? Is it more than you usually do?
Slightly more. I would say that we're certainly not, we wouldn't think of ourselves as completely fully invested here or fully risk on. We continuously have to invest. We have insurance liabilities that we need to invest to back. So we need to sort of pick the best opportunities. But we think this is a time where you want to have a little bit more dry powder to take advantage.
Talk to us more about these insurance liabilities. It's not something we talk a lot about when it comes to our drive to the close.
But we talk a lot about the rising costs of insuring homes in California.
Yeah, one of the most
Florida.
read stories this week on the terminal is a big take all about how there's a tinderbox out in California because so many of the homes out there are uninsurable.
So Mass Mutual, our focus is we have a great product mix of whole life as well as annuities and some other products. What I actually focus on is an annuity portfolio. And we've seen, because of the high yields in the short end, we've seen incredible demand there for annuities. But at the same time, that's also caused a lot of competition in markets for, shorter assets. But it's actually been complemented because if you look at a lot of, issuers and treasurers of corporates, they don't want to issue at the long end because they don't want to lock in these long rates. So we have found, opportunities, call it, within 7 years and in.
Yeah, and it's just kind of to wrap up, it's interesting too because of what you have to do because of the insurance liabilities. I mean, when you look at the environment, how comfortable do you feel? I started saying, when we kicked off this conversation, what it's like to be a portfolio manager right now, and it's tricky. But I mean, having said that, when you look at the outlook, the visibility that you have to have a longer term visibility. How comfortable? Do you feel more comfortable kind of looking out 5 to 7 to 10 years versus maybe looking out at the next 6 months, 12 months, 1 year right now?
Absolutely. We're not, investing based on whether the Fed's going to cut in June or July, because as we've seen, the market's consistently gotten that wrong, and I think most people have gotten it wrong. But yes, we take a long-term view, and we're looking at where we are in the default cycle. Defaults are low, but they're starting to tick up. So how does that position us? And kind of goes back to what I said, if we're entering into a default cycle, how should we position ourselves? And really having that long-term view is key to what we do at Mass Mutual.
All right. Well, great stuff. So appreciate it. Kelly, thanks so much. Have a great weekend. Kelly Kowalski, she is portfolio manager at Mass Mutual, joining us there from Boston.
We're seeing a little bit of selling into the close. We're not at our worst levels of the day, but the S&P 500 down 0.6%. The Dow down about 0.1%. The NASDAQ 100 right now down 1.36%, close to the worst levels of the day.
Quick check, folks, on the Treasury trade. You've got a 2-year note with the yield of 4.48 and a 10-year note with the yield of 4.08. So we're off our highs from the day. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pettit. BlackRock will acquire SpiderRock Advisors, a Chicago-based asset management and technology firm to provide personalized investing strategies to wealth management clients. SpiderRock manages about $4.8 billion for family offices, investment advisors, and other clients. BlackRock shares, they're up right now by 0.5%. Broadcom shares after earnings down 6.5%. Broadcom predicted that AI spending will fuel growth more quickly than expected this year, even as sluggish demand in other areas weigh on semiconductor sales. And with more on the earnings story, here's Bloomberg's Ed Ludlow.
The reality is that it's bread and butter business, which is...
Welcome to the digital age. Are you struggling to stand out here? Don't worry. Meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, page rank, and SERPs, video editing, recording and production.
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/Blue
blue.online.tv. With Blue TV, your business growth will be skyrocketed.
And those are some of our top company stories at this hour. I'm Charlie Pelletin. This is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenevec on Bloomberg Radio and Television.
It is a Bloomberg.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
But it's like where that stuff falls and lands. It's a lot of different things going on, and you wonder, the stock's a little bit lower, but definitely getting, I wonder, I don't know, I guess at any time this would catch our attention, but because of the other concerns around going on a Boeing, especially around the 737 program, and just worrying about oversight. The other story, do we want to mention the union demands?
Yeah, that's another reason why I think the stock could be under pressure. The largest union at Boeing demands a 40% pay raise over 3 years. It had announced the start of the first full contract talks in 16 years.
That's big.
It's a big bump.
That's a big bump. Yeah, so there's a lot going on with Boeing. It's something that, it's why it continues to be on our radar, and it's something that we're going to continue to keep a watch on here in 2024. Shares, by the way, of Boeing are down about 24% this year. So, what?
Flying is still so safe.
Yeah, you get into a car and probably don't think twice.
No.
Getting on a plane, you start on the bell starts now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele. We're counting you down to the closing bell. Here to help take us beyond the bell. It's a global simulcast. Scarlett Fu stepping into the television studio. Carol Massar and Tim Stenevec just starting their day in the radio booth. Welcome to our audiences across all of our Bloomberg platforms.
Under the mattress.
And I cannot hear myself speak above the din of Carol Massar. Happy Friday, Carol.
This is what it's like to be a woman in our world today.
Happy International Women's Day, Carol Massar.
Happy to you as well. Interesting day, different tone. It's been a busy, jam-packed week with a lot of stuff going on. And, of course, that big monthly jobs report that, once again, I was talking to Mike McKee in the newsroom. I'm like, Goldilocks economy, can we say soft landing? And he's like, maybe Goldilocks, but what's happening is we continue to get data points, right, where there's kind of a mixed bag of data, and it can be somewhat confusing when it comes to investors trying to figure out what happens next.
Yeah, look no further than what we saw in the equity markets today. We saw new highs on the S&P 500 and the NASDAQ 100, only to see reversals late morning when it came to chips. And now it looks like we're going to see these equity averages move lower on the day today. Bitcoin's an interesting one. I can't explain it, but it hit a new record. It hit a record today, I should say. Still above $69,000 per Bitcoin. Scarlett.
Yeah, it got to 70,000, but it failed to hold at that level. And it was right around that time that it and the NASDAQ 100 both reversed course and turned lower. So maybe the fact that that 70,000 level was just, a blip meant that people were saying, oh, you know what, heading into the weekend, we don't need to be testing this level again.
You know what we haven't talked about? Cruise stocks. Did you know Carnival, second best performing stock within the S&P, Royal Caribbean also doing well too? It's like, you're going to take cruises? How bad can the economy be? Like, you're still spending a lot of money on that. Those things are expensive.
Isn't that like recession proof though? I feel like the cruise lines.
They probably want you to think that.
Yeah, all right. Well, there you go. I mean, if it's any consolation here, only in sectors right now that really performed, at least on a daily basis, you're going to find that in real estate, energy, and utilities. The net effect of it all is red across the screen on the day and on the week. A Dow Jones Industrial Average down about 68 points, or 0.2%. The S&P down about 34 points, or 0.7%, while the NASDAQ Composite sold off by about 1.2% here on the day. The NASDAQ 100 down 1.5%, and the Russell 2000, that was your relative outperformer, though still in the red, down 0.1%.
I'm glad you brought up Carnival. Stifel saying 2024 guide boost on strong demand. So basically, they looked at healthy booking patterns. So apparently, Alex, I guess people are taking cruises and they're booking way out. So some optimism there. But the stocks, I'm just going to flip around. The stocks coming under a lot of pressure. So that's not where we saw investors moving into. Maybe moving into cruise line stocks, but not into semiconductors. We know Broadcom and Marvell both coming out late last night, and that certainly has put some pressure on the trade. The stock's down about 4% today.
Yeah, that was a 1-2 punch for the tech sector as a whole, because if you look at the 11 industry groups in the S&P 500, the biggest slice of the pie belongs to infotech and semiconductor stocks, leading the way down there. The group falling 1.8% as a whole. Consumer staples down about 0.8%. Materials also under pressure. There were 4 sectors in the green, led by real estate investment trusts, energy stocks, and utilities.
All right, guys, let's get to some of the individual gainers in today's session. They kind of flipped from this morning to later in the trade as the markets moved down here. So having said that, Carvana, though, staying atop that list, but way off its highs of the days. At its highs up almost 14%, finishing the day with a gain of about 7%. RBC out, issuing an upgrade to sector perform. They doubled the price target on the name to a street high of $90 a share. Stock, about 32% of the float is shorted, so just keep that in mind. That's kind of interesting. Stock still has had quite a run up, more than 60% year to date. RBC saying the stock has the potential to trade even higher, and an underperform rating is infeasible for the foreseeable future. Another one, Biogen. It was among the top gainers in both the S&P 500 and the NASDAQ 100 after Eli Lilly said the FDA is delaying its decision on its Alzheimer's disease drug. So that meant for Biogen, which makes a different drug, its own Alzheimer's drug, that received FDA approval to treat Alzheimer's in July, or starting in July, I should say. So Biogen was up about 4% at its highs, finishing the day with a gain of about 1.8%. And one more, it was a pandemic darling, DocuSign, up 10% at its highs today, finishing the day just under 5% gain here at the close. The company coming out reported fourth quarter results, beat expectations. It also gave an outlook that is seen as strong. We talked about that one late last night. So again, some of the outperformers in today's session, Tim.
Okay, there were no shortage of underperformers. It was actually hard for me to choose just 4, and I did choose 4 today. I do want to actually hit an extra one. Broadcom closing down 7% in its biggest drop since March of 2020. We did see a reversal in the chip space today. In the late morning, NVIDIA had hit a new record, before falling as much as 6% to finish the day down by 5.6%. In a sign of how far NVIDIA has rallied just this year, at one point in the day, a relatively small drop erased more than $140 billion in market value, which ranks among the biggest single-day value destructions in U.S. stock market history. So that's how far NVIDIA has come in such a short time. I do want to check in on shares of Costco. They did finish lower on the day today by 7.5%. It's the biggest intraday decline since May of 2022. The company reported second quarter revenue and gross margin that did not meet consensus estimates. And then Marvell Technology, another one in the chip space, fell as much as 11% earlier in the session, but ended up finishing the day finishing down 11.36%. The company did give a first quarter forecast that was weaker than expected. Analysts said that AI was unable to offset weakness in other parts of the business. And an honorable mention is Amylyx Pharmaceuticals. Pharmaceuticals. This company just plummeted today after its drug for ALS failed to benefit patients in a trial. It suggests that U.S. regulators may have approved an ineffective treatment. Look at this, guys. Shares finishing the day down by 82%. Remember, this is a $160,000 a year treatment for ALS, and it gained full FDA approval back in 2022, despite uncertainty around it.
That chart kind of doesn't do it justice,
It really
right?
doesn't.
No, because it's been down there all day.
It's basically like draw a line on the bottom.
Yeah.
Just look at the top right. Just look at the top right corner, that big number in red. That's all you need to know.
There is something in there. All right, guys, looking at yields. Honestly, a bit of a snooze fest. The action more in the front end. You saw a lot of buying coming in when that jobs number came out. You had yields down by a few more basis points, but ending the day down 2. I mean, that's not where the action was.
All right, you know where the action is headed, guys?
Tell me.
Miami Beach.
But they don't want it to be there. That's the thing, right?
Well, spring
I
break.
feel like they want you to go somewhere else.
Actually, right. It's been there, and there's a big warning. There's a great story. It's among the most read on the Bloomberg, and basically Miami Beach has a pretty stern warning, and they are spending about $250,000 to basically warn any of those who want to come down there for spring break. They're also going to be drunk driving checkpoints, a 6 p.m. curfew on the beach. 6 p.m.?
Hey.
6 p.m. Isn't that when
You
it
know what?
starts?
That's fine with
It's like
me.
Boca.
That's bedtime.
Boca. No access to city garages or sidewalk seating on the famed Ocean Drive. This is what happens when you have a lot of wealthy and influential individuals that are moving down, and so they're trying to kind of portray the area, Miami Beach, to be a little bit more sophisticated.
Yeah, billionaires like Ken Griffin, Josh Harris, Orlando Bravo, they all now own luxury homes there. You know, they're trying to rebrand Miami as Wall Street South. So, you know, it's a different demographic.
Did they actually go down to South Beach? I thought they just stayed sequestered over there.
I don't know.
It's
Well,
okay.
now they can because there's a curfew for the party people.
It's okay. If you still want to party, you can go to South Padre Island, okay? Because South Padre Island in Texas has spent $400,000 marketing itself to spring breakers, college students, and families, although I don't know why families would want to go if spring breakers and college students are there. There are about 2,000 permanent residents there, and they're overtaken each spring break by 1.7 million visitors.
There's a battle of the universities, apparently, and they feature a giant Jenga, tug-of-war, and limbo contest.
I think I know where you want to go for spring break.
Terrible, you guys.
I think if you live there, you know where you don't want to be and where you want to go, somewhere else you want to go. You know, on Sunday, of course, we have the switch to daylight savings, but we also have the big Oscar telecast. And my favorite part of it, it's like the Super Bowl for celebrity news and entertainment, is to watch the red carpet. And one of the big things, Alex, that they're talking about right now is sustainability in fashion, and how that could really, the starting point could really be in shoes and footwear.
So apparently this is the second year that the Academy has given attendees a guide to dressing sustainably for a more eco-friendly look, which I find kind of interesting. And Laura Williams, who writes for Bloomberg Opinion, was saying, if you watch the shoes, like that's where the trends will start to appear. And I will, because I watch Romaine's shoes every day, and I swear this guy has a different pair every single day. So this, I'm already like trained. I'm already trained to watch the shoes.
Romaine?
Is it true?
Joke's on you, Alex. I'm not wearing any shoes.
He is. Very nice brown shoes.
So does that mean Lady Gaga's going to pull out her meat dress again? Like, as long as it's sustainably, you know, no hormones and all that good stuff?
Is it sustainable?
I don't know.
That was before sustainability fashion really
I think we're
became
talking
a
more
thing.
like eco-sustainability.
Oh, okay.
Like,
You know, more people.
Okay, so no meat dress.
I'm one of those people. More people watch the State of the Union than watch the Oscars.
Oh, we had a chart on this, Tim.
Yeah.
We're way past that. Yeah, we
okay.
already-
Well, I'm one of those people. I can tell you that I watched it last night, and I don't think I'll be watching
Does
Sunday
Romaine
night.
really not have shoes on? I'm really sorry.
What color are his
You'll never
socks?
know, Carol.
That's a question.
All right. To be continued, apparently. All right, guys, that's a wrap. Have a great weekend. Our cross-platform radio, TV, YouTube, Bloomberg Originals, Beyond the Bell. We will see you again on Monday.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week, a Super Tuesday that resulted in the presumptive nominees for president. Not 1, but 2 days of Capitol Hill testimony from Fed Chair Jay Powell, the State of the Union address, a February payrolls report that showed a cooler yet resilient labor market, and a week that saw yet more records in the equity market.
I look forward to the day when we can say it's not jam-packed, because it was another jam-packed week.
Seemed like
to
a
say the
long
least.
week.
It did.
Maybe it was just me.
All right, well, it's all the backdrop for tonight's episode of Bloomberg Wall Street Week with David Weston on Bloomberg TV and radio. It's coming your way at 6 p.m. Wall Street time this evening. David in our studio to join us with a preview. Good to have you here, David. There was a lot going on. There's always a lot going on. We do always like to ask you how you thought about it as it came together.
Well, an awful lot going on, a lot to follow. You know who was not paying attention to any of it?
You.
President Xi. Okay. He had something called the National People's Congress going on, the 14th.
True.
A little
trying to figure out
ditty.
what to go with his economy. He's got some issues over there.
He does.
I think he was otherwise distracted. He was not paying attention to Jay Powell or even Joe Biden, I don't think.
Yeah, markets watch it really closely because there's been a lot of pressure over the last, I don't know how many months at this point, going back to last year when we thought China was going to come back. It didn't. People keep thinking that President Xi needs to be a little bit more aggressive in terms of his plan. So how did you kind of lay it out?
Well, we actually have Zanny Minton-Beddoes. Do you know her? She's the editor of The Economist, who is really smart. She's actually on her way over to China right now. But he was very aggressive in goals. He's going to go back to 5%. It's not clear how he's going to get there. But not so aggressive in telling us how. I mean, in fact, they eliminated the news conference that the premier has always had to explain it, to take some questions. We're not going to do that anymore. He said, we're just going to get there.
The details?
And he didn't have an awful lot of stimulus around the edges, but not fundamentally. He didn't have it. So he says it's going to be 5%, so I guess it's going to be 5%.
Well, there's a target, right? We'll see how he gets there. Yeah. Hey, the other thing is, and this is something, Tim and I talked a lot about China this week. We felt like that there were a lot of company-specific stories, whether it was Tesla specifically.
Yeah, there were chip stories, too.
A lot of chip stories as well. And so we talked with Chris Miller of Chip Wars, and we got into kind of U.S.-China relationships and the tech war that's out there.
He's the best.
He is great.
I love having him on. He's just terrific. And that book is still just so terrific.
So relevant,
so timely, too. He wrote it in 2022.
I know.
And it's like...
He caught the wave.
He really
got
did,
the right subject at the right time. And it's so understandable. It's just great. But you raised a really important point, because we did have President Biden speaking of the State of the Union. And one of the things we talked to Zanny about was the difficulties that President Xi has with his economy right now against the backdrop of the U.S.-China relations, and how little difference it looks like there is between President Trump, former President Trump, and President Biden. This is part of what she had to say.
I think this is one of the areas where there's the least difference between, former President Trump and President Biden. Being tough on China is one thing that unites everyone in this country. There is, if we have a President Trump, we'll certainly have much higher tariffs. Even if if President Biden wins, you're still not going to have a sort of big change to China policy. That means that it has become a very different environment. And so if you're a foreign investor looking at China, not only do you have all of the domestic things that we've just talked about, you have it against a backdrop of a kind of geopolitical environment where investing in China is a tricky thing to do, because you have to think. Do you remember Jake Sullivan, the National Security Advisor, talked about a small yard with a high fence? That would be the way that the U.S. would approach what it wants to protect from China. Well, the yard may be getting bigger and the fence may be getting higher. So what are the new kind of strictures? What are the new controls coming? So I think it's only a slight exaggeration to say that China has sort of become uninvestable for outsiders certainly in many sectors.
I must say, I find this stunning. There was talk a couple years ago about China being uninvestable, and everybody I talked to on Wall Street said, that's ridiculous. It's the second largest economy in the world. You cannot just ignore China.
Right.
And yet, increasingly, you see with the foreign direct investment, it's just fallen off a cliff when it comes to China. And Zanny said, look, if you're an entrepreneur, why do you really want to be in China right now? Why do you want to invest there? It's just too uncertain, because he's taken all the power centrally in Beijing, and it seems to be somewhat capricious the way he exercises it.
I was going to say, I look no further than what Apple has done this year.
Yeah,
shares of Apple. And we talk about it a lot, but I mean, 20% of its revenue comes from the greater China region. And if you're relying on China for revenue and also for manufacturing via contract manufacturing from Taiwanese Foxconn, then it makes sense that investors might be a little worried.
Think about the other story that's among the most read in the Bloomberg about TSMC, right?
Yeah.
The money for their plant here in the United States, looking to kind of get out.
Well, yeah, I mean, from the U.S. government going to TSMC, they're going to be building it here in the United States. I mean, it really is the chip war that we talked about. Exactly. But at the same time, I find this a fundamental dilemma, because it is the second largest economy in the world. It's very much a part of the global economy. This is not the Soviet Union during the Cold War, where you could essentially economically almost ignore the Soviet Union. You cannot ignore China economically.
You talk to tons of leaders. And the other thing, though, and you and I talk about this, it's not like though the corporate world has run away away completely and shut down all of their shops, if you will, in China. You know what I'm saying? Like, you still see financial firms talking about like opening. Like, so I'm trying to understand what the truth is.
Yeah, I think
the reality.
Maybe the Delta. I don't think a lot of corporations are looking to expand their presence in China,
But
which
not
they were
necessarily
for
pull
many
out.
years. They were putting more and more in. I'm not sure how many Western companies now are saying we want to go in deeper. We'll see.
Okay, you had a conversation also with Larry Summers that will go on Wall Street Week, and that conversation sparking some news. In fact, we got a news alert about what he said when it comes to
He now says the
rates.
Fed should cut rates, right? That's a no.
Wait, it displaced your Palm Beach story. It's the number one story. Yeah, he thinks the Fed is making a big mistake, that they are underestimating where the neutral rate has to be. He says it's way above 2.5%. He even said at one point he thinks it's closer to having a 4 handle than a 2 handle.
That's a big difference.
Exactly, but he said there's a lot of fundamental reasons that is driving that rate up, and one of the consequences of that, going back to the question about rate cuts, is if in fact he's right, then being where we are at 5.25, call it, is not as restrictive as you might think if the neutral rate's at 2.5. If the neutral rate's at 3.5, the difference between 5.25 and 3.5 is a lot different from the difference between 5.25 and 2.5.
We talk about this all the time. I mean, the Fed, it's really hard for them to, at this point come out and say, all right, maybe not 2%, right? They've got to, kind of drive it home, if you will. But at some point you do wonder, where they have that bigger conversation about it's a different environment. I would argue that I think the environment is going to be different, whether it's regulations, climate change moves. I just think that there's something that's putting a floor under some of the costs in global society.
If Larry's right about this, then there are a lot of people who are wrong, because the entire market is expecting 3 rate cuts this year, June commencing, for 25 basis points at least.
Except for Torsten Slock, Apollo.
And we spoke to him last
zero,
week.
yeah.
We spoke to him last week. But it does, it's certainly contrarian right now, but we should note, Larry was right at the beginning about the stickiness of inflation.
He was right about that. And one of the things I think is striking a lot of people, including Larry, but not only Larry, is we've gone from that 6 rate cut expectation to 3, and the market's weathered it pretty well, surprisingly. If you'd asked at the beginning, if we go from 6 to 3, what will the markets do? You would have thought the markets really would react. We didn't get much reaction. The markets are doing just fine.
It is International Women's Day. What,
Go
do you
on.
not want to go there?
No, you go.
We get one day a year,
Hey,
Tim.
Carol,
Don't
it's
take
your-
it away
it's
from
your
us.
day.
But you did have Sally Krawcheck
Yeah.
of Elvest, and something Tim and I touched on too about this great wealth transfer and the role that women will play in all of it.
Yeah, they did a survey of this question because we talk about the wealth transfer sort of globally, not just the United States, globally, but we tend to think about it as a generational issue that's going from the older generation to the younger one. She makes the point in this survey that, in fact, there's going to be a huge transfer from men to women because, let's be honest, men die sooner. We don't have as long an hair, and a lot of them are older anyway, and that we really haven't prepared, particularly the advisors for these people, have not prepared for this. She tells me, anecdotally at least, a story that one of the problems is that when you have a husband and wife that have a lot of money, typically the advisor talks to the husband, and the wife is kept out. And so when the husband dies, if the husband dies for the wife doesn't turn to the advisor. The wife takes the money and puts it in the bank.
Yep.
Because she doesn't have any relationship with the advisor. Something I had not focused on. She said they're going to have to change the way they do business on Wall Street.
So we talked about this a little earlier on our program, the same exact thing, David. Hey, we saved 20 seconds for
know if he's
preview of the
going down
conversation.
for spring break?
No.
For my favorite, I hope.
I hope. I want to talk GE a little bit.
We broke up
20
GE,
seconds.
the last pieces of GE, icon. Once it's the largest
Amazing.
company in the world, now it's 3 companies as of April 2nd. And we talked with Larry Culp, who's the mastermind behind this, GE. I said, you're the last GE CEO. How does that feel?
Amazing.
He's going to take aerospace, and we talked to his successor, Scott Strazik, who's going to take energy. It's called Vernova.
GE Vernova.
GE Vernova.
Okay, so we're going to have to get used to some new tickers, too.
He is going to go to spring break.
I'm not going to go to spring break.
All right. Wall Street Week coming your way at the top of the hour.
Wall Street. We do check markets all day long here at Bloomberg. It was a losing week for the S&P 500 index. First decline in 3 weeks. This week, the S&P was down by 0.3%. Today, red on the screen, traders sent stocks sliding on speculation that a rally to multiple records this year is now overdone. S&P ends the week, heads into the weekend at 51.23, down 33 points today, a drop of 0.7%. Dow Industrials down 68, drop there of 0.2%. Nasdaq down 188, a decline today of 1.2%. 10-year 4.07% with a 2-year 4.47%. Spot gold today up 0.8%, 21.77 the ounce, and West Texas Intermediate crude oil down 1.3%, 77.85 a barrel. Bitcoin up 2.5%, right now at 68,978. Bitcoin did cross 70,000 today. Among some retail stocks, Gap surged after earnings, up 8.2%. Costco after earnings down 7.6%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar, along with Tim Stanovic, live here on Bloomberg Business Week. Well, you might remember our interview around a big take earlier this week, how Wall Street banks are retreating when it comes to DEI, diversity, equity, and inclusion, as backlash snowballs. For example, programs at big banks that were once meant for people of color or women are now open to all.
No question that the concept around DEI has changed a lot in just a few years, Carol. I mean, post-George Floyd, we were talking about big shifts that companies were making. And now, as backlash has started to happen, there's more big shifts happening. But think about it over the last few decades and how it shifted over that time. Somebody who's had a front row seat to those changes is Nelly Bojero. She's a managing director and senior global inclusion and diversity lead at Accenture. When she joined Accenture nearly 40 years ago, she created the first role that dealt with diversity.
All right, take us back. First of all, welcome, welcome. So nice to have you here in studio.
And congratulations on your new book.
Thank you, thank you.
It's called Unwavering, Rejecting Bias, Igniting Change, Celebrating Inclusion. Congratulations, coming out today on this International Women's Day. Take us back a few years ago when you started out with a DEI program. First of all, what was the scenario and what was that process like? How hard was it?
Yeah, I love going back. So when I started many, many years ago, over decades ago, there wasn't a DEI program. No one was using the word diversity at all. So I just knew as a Latina coming into the office here in New York, that I looked different, I sounded different, and people treated me that way. And I wanted to get to a place that I changed that culture and that environment. It was very hard to be in meetings and people repeat what you're saying because I have this very New Yorican accent, from New York, Puerto Rican background.
We love all accents in New York.
And this one but it's interesting because this one came with, a bias because people will perceive the accent from their bias, thinking that my accent was an indicator of what they perceived my level of intelligence to be or lack thereof. So there were a lot of those moments where I had to sort of sit back and say, either I'm going to leave this culture or I'm going to change it. And I chose the latter to change it.
How did you do it?
I just understood very early on that I had to create a brand of courage and I had to show up very assertive and say that this is a space that was meant for me. And I knew I couldn't do it alone, so I started going to leaders and having conversations and say, help me change this culture.
Were there affinity groups at this time?
Oh, no.
So how do you create a community? And that's what I find that's what I find pretty remarkable about working in a big organization is each organization that you work in, a lot of them do have affinity groups where you can separate into smaller communities, whether they are based on race or gender or based on, family status. They're all different types of affinity groups at a lot of workplaces. How did you find your community of people to support you without that?
Yeah, it wasn't easy. So it's interesting because when I go back and look back in that year and that time, there weren't that many of us. We were scattered in different parts of the U.S., so we started to find out about each other, like we used to say back then, through the download. So who's here? Who's like me? And we started having conversations. And there was one experience that we all came together, all 7 of us. And this was African Americans and Hispanic Americans at the time that we knew of because we didn't have a list to go by and see who was part of the representation. And we sat in the lobby cafeteria, and then after that, a leader approached me and said, hey, what's going on? Like, why were all of you together? And I said, we're planning a revolution. So, I understood how to have humor in the process, too.
Well, that's what I kind of wanted wanted to ask you, because I have a feeling of like, I understand the need and desire for affinity groups to make people feel like that they belong,
Yes.
right? And they're with people who maybe are going through similar situations, they can talk it through, and then getting notice of leaders of like, why are you together? What are you talking about? At the same time, I always feel like the way we're going to solve all these problems is we all got to be lumped together and we all got to have the discussions together. What's the right balance in that? Do you know what I'm saying? Because
I do.
I always think about
I
when we
do.
constantly kind of separate everybody into groups, it kind of prevents us all from figuring it out all together.
Yeah, and that's such an excellent point, because if you think about it from the perspective of inclusion, having an affinity group, you don't want to exclude others. This is why it was important to us at Accenture for many years to say, we're going to have these ERGs, we called them ERGs at the time, employee resource groups, but everybody's welcomed. And we will actually encourage people to come.
Did other people really come though?
They started to come one by one, and then it was a lot. But then what we started to do was insist that we will have sort of events where we have people that were not members of the group to really come and speak to the group. We also started focusing on ensuring that we had conversations. Sharing experiences are really important in this space and getting people to understand. I knew that there were a lot of people that wanted to understand me, but didn't have my same lived experience. So it was up to me to start sharing my lived experience. I had one situation where I was looking for a home, and one of the leaders said, oh, I'm going to introduce you to my realtor. And I said, well, will your realtor be okay working with a Latina? And he was just stunned by that question.
That you
and
even
I said,
asked that, right?
Yeah, and I said, in my world, I need to be able to ask that question. I need to understand that this realtor is going to be comfortable showing me homes in neighborhoods that they otherwise may not be comfortable showing me. So I think being open and transparent is really important in this space. I also think that it's really important to say that we're going to give each other grace. Grace is really important, because you may offend me with something that was not your intention.
That's a great concept, because I feel like coming off of George Floyd, I had some great conversations with our colleagues. Bloomberg did some great programs to really let people kind of bare their soul about their experience as a person of color in this country and what it's like and what you're living. We're going to make mistakes, though. And so how we kind of give each other grace to say, I'm sorry, I didn't understand that was alienating or the wrong thing to say. And I feel like we're not always there with that, but that's an important concept of all of this.
It is, and I say that I give people grace, and grace, then what that translates to, I'm educating people because I'm having a conversation. But if they do it again, then grace is no longer there, because then it was a choice, right?
Right.
But we have to start from that place. And for me, in my role for so many years and decades, I have understood that I cannot take anything personal, because I have to be able to take in what you're feeling and seeing and experiencing and have a conversation where we can talk about it. So I had someone one time tell me, I forget you're a Latina. And I'm like, well, that's nice, because I cannot forget it any single day. So, and I said, I know that may seem like a compliment to you, but it's not received that way. And let me help you understand why. So I think conversations are important.
I got to ask, we've had two stories in the past week about the backlash to DEI. I talked a little bit about one of them at the top of our introduction to you, but it's clear that at some big companies like Bank of America, internal programs that used to focus on women and minorities have been brought in to include everyone. At Goldman Sachs, their Possibility Summit for Black college students, it's now open to white students. There's a big backlash happening when it comes to DEI. What do you make of that backlash?
Listen, I think this is concerning, but I always ask myself, is it a backlash, or is it that companies are trying to see how can they still focus on programs in a way that it can be inclusive for all? How do they not back away from some of these schools and some of these programs and say we want to make sure that we still focus on that targeted demographic without making others feel excluded? It is a very touchy situation. I can't speak for these other companies. I could speak for Accenture.
Have you seen a change at Accenture the other way in recent years?
No.
Have you seen any concern about a backlash at Accenture over the last 1 or 2 years?
No. 100% no. We are committed. We are unwavered, which is the title of the book, Unwavering, because that's the organization I've grown up in and have worked in. I mean, we are committed. We're committed to all aspects of diversity, not just in the U.S., but around the world. It is embedded into what we do.
Right, we talked about companies taking it out of their corporate documents. They're kind of official government filings. Doesn't mean they're necessarily backing off on their programs, but they don't want to be targets politically. Here we are in an election season.
And post-Supreme Court with this affirmative action, when it rejected affirmative action at the nation's colleges.
What do you make of the political winds that are blowing currently? We've got about a minute or so left here.
Yeah, no, They're concerning. I don't want what I worked so hard for 3 decades to go away. I do know that we still need protections and we need focus to make sure that people that are disadvantaged or from a different community still have opportunities to achieve their goals. So I am concerned, but I'm also really hopeful that companies that get why it's important, for example, they have to attract the talent, they have to retain, they have to promote it so they can be successful. So the companies that get the business rationale as to why, they will continue to focus.
I do wonder too, Nellie, in just 30 seconds left here, how important it is of having folks in the C-suite or very senior positions that are either Latino or they're people of color or they're women or they're LGBTQ in advancing DEI efforts. And again, just got about 25, 30 seconds.
Representation matters. It really does.
But does it matter having them in higher positions?
It matters. On our board, 45% of our board is women, 45% is ethnic background. It is important to have the voices in the room, and it's important to have a leader like we have in Julie Sweet that just makes this part of the business agenda.
It's just there.
It's just there.
It just happens. Listen, congratulations on the book. Really smart conversation about it. And I feel like it's going to be, we continue to kind of work our way through it. And it's interesting kind of some of the pushback we're seeing, but good to hear the efforts that you guys are doing over at Accenture. Congratulations on the book.
Thank you. Thank you.
Nelly Borrero, she is Managing Director, Senior Global Inclusion and Diversity Lead at Accenture. Her new book, Unwavering, Rejecting Bias, Igniting Change, and Celebrating Inclusion.
Let's get a check on the latest world and national news. For that, we go to Amy Morris in the Bloomberg 99.1 newsroom in D.C. Hey, Amy.
Hey, Tim, thanks. The U.S. jobless rate climbed to a 2-year high in February as hiring remained healthy. That's a cooler yet resilient labor market in store. Acting U.S. Labor Secretary Julie Su spoke with Anne-Marie Hordern on BTV after this report came out.
The jobs numbers continue to be very strong. The 3-month average is actually 265,000. So, we look at trends as much as we look at monthly numbers, and our overtime figures demonstrate strong, steady, continued growth. Exactly what we want to see. It feels like the very definition of a soft landing.
Acting U.S. Labor Secretary Julie Su telling Bloomberg Television that manufacturing in the U.S. is just taking off and that there's really more work to be done. President Biden making his case for a second term during his State of the Union last night, frequently criticizing his predecessor, Donald Trump. Brown University political science professor Wendy Schiller tells Bloomberg the president used the speech to energize the Democrats.
He picked a fight with the Republicans pretty much right off the bat. This was about the Democratic base. This speech was entirely directed at energizing the Democratic base and convincing them that he's perfectly capable of making the argument against Donald Trump, whose name he didn't use during the speech, and the Republican Party.
Brown University political science professor Wendy Schiller. President Biden said in that State of the Union address, he has ordered the military to create a temporary port on the Gaza coast and use the speech to call on Israel to let in more aid. But U.S. officials say it would take weeks to build that facility. Well, the European Union, along with its partners, including the U.S., are set to launch a maritime aid corridor to Gaza as soon as this weekend. The efforts, including security checks, will be coordinated with Israel, which controls all but one of Gaza's land borders and its territorial waters and airspace. Global news 24 hours a day, and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
I'm from the UK and I'm the inventor of the gel razor. And today I'm looking for an angel investor to fund my project, the gel razor, whether that's a working concept and working prototype or manufacturing possibilities with investment or to get me a licensing deal secured. If you go in any supermarket today, you will see packets of razors sold separately with tins of mousse or gel. Hence I developed the all-in-one. The idea is you pressurise the handle, the gel flows through the reservoir up to the head of the razor, coating the blades, ready for shave. My target market is 18 plus, male or female, male blue version, female pink version. What I'm looking for in an investor is someone who's passionate, determined, shares my vision. That's an important step for me, and willing to succeed as I wanted to succeed myself. Patented in the UK in 2021 September. With copyright protection, I have a logo for the gel razor, which you will see on my LinkedIn profile. Currently working with a company in the US who have done me a lovely sell sheet. Big up to them guys. So if you're interested, contact me on LinkedIn profile, Paul J. Gwilt, GWILT, or email me at mufc219@gmail.com.
A bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Welcome to the digital age. Are you struggling to stand out here? Don't worry. Meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, page rank, and SERPs, video editing, recording and production.
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/blue.online.tv.
With Blue TV, your business growth will be skyrocketed.
A drop of 0.2%. NASDAQ down 188, a decline of 1.2%. 10-year 4.07% with a 2-year 4.47%. Gold today up $17 the ounce to $21.77, up 0.8%. Crude oil, West Texas Intermediate down 1.4%, $77.83 a barrel. Bitcoin was trading above $70,000 today, $70,000, up 2.2% before retreating. We had Bitcoin.
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down the path a few times then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do three things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
The city has spent $250,000 on a slick campaign, including a video that declares it's breaking up with spring break. You know what?
What? You were one of those rowdy kids?
I never, no. You know, I was on the tennis team in
it's
college.
Only you and me talking. You can be honest.
Every spring break, we'd have to go somewhere with the tennis team.
Oh.
Yeah, I know.
If I had a buck for that excuse.
No, it's just like, we weren't allowed to do anything.
All right, anyway, the ominous warning to young partygoers underscores how the city is striving to portray a more sophisticated and less frivolous image. Let's just get to it, because Anna Kaiser is with us. She's Bloomberg News Florida correspondent all over this story, which, as Tim said, is among the most read on the Bloomberg terminal today. Larry Summers, I think it took Larry Summers to like kick you off the first place. She joins us from Miami. Anna, take a step back. Tell us what's going on here and what Miami Beach is up to.
Yeah, so spring break is upon us. It is March in Miami. The city is pursuing its most aggressive crackdown on spring break ever. There's been 3 years of states of emergency, of violence, of rowdiness. So this year, the city decided, like, absolutely not, do not come. They put out this message. It's, kind of gone viral on social media. As you said, it's a very sort of slick media campaign where they have paid actors saying, like, we're breaking up with spring break. This is a toxic relationship. Don't come back. So they have completely had it. There's a new mayor in town, so he's taking a very hardline approach.
Wouldn't it be funny if everyone was like, you know what, it'd actually be funnier if we went because they don't want us to come?
Kind of like take that.
Yeah, take that. We'll see if that happens.
Time will tell. It's the first weekend.
Why is this happening though? I mean, is it? We talk a lot. We talked yesterday, gosh, with a realtor who did $750 million in sales in South Florida in 2021, and she talked about all cash deals, the market above 10 million, still really hot right now. Is that what this is? It's all the new money coming in and the changing of the city?
I think that's a part of it. Miami Beach, especially, the residents definitely stray older and very wealthy, sometimes very, very wealthy. So there's been a big demand from constituents to sort of shut this down as the class of the city has gotten higher and higher. So they elected a new mayor at the end of last year. And so he's come in with this, he ran on this like law and order campaign. Spring break was a big part of that because it's become such a big nuisance for people who actually live here. So that's definitely a factor in all of these measures.
Is it that they don't need the money? I mean, I'm assuming that all of those kids going in there for spring break brought in a fair amount of money as well.
Yeah, I mean, some of the businesses definitely in the past would, there's always been a tension between tourism businesses and some of the city's wealthier residents who don't like that kind of tourism, especially like bars and clubs. But in the case of spring break in particular, last year, a bunch of the bars and restaurants actually closed down themselves during spring break because things got out of hand. There was a shooting, 2 people died. I mean, it was a pretty bad situation. So in the case of spring break, I think even some of the local businesses are kind of wanting to turn away to, to attract a different kind of crowd.
Anna, you're there in Miami. I am curious about the Ken Griffins, the Josh Harrises, and Orlando Bravos of the world who are moving down, super rich folks who are moving offices, buying lots of, pricey real estate. How much political clout can we assume that they have in the area now?
Oh gosh, a lot. They've come with their checkbooks. They, just like they did in their previous destinations, previous places that they lived, they write their political donation checks. They are very involved in philanthropy. Ken Griffin especially has made, a huge splash on the Miami philanthropy scene in the last year. and in local government as well. So these people are kind of everywhere these days. They've made a huge mark in really not that much time.
And Ken Griffin fled Chicago, right? Because he was kind of fed up with everything that was
Yeah,
going on.
he made
over
no secret of his disdain for what was happening to what he said what was happening to the city. But Anna, I do want to say, don't despair if you're a spring breaker looking for some sort of place to go and let loose, as they say. South Padre Island, you write about in your piece. Not a place I've ever been, just a place I've heard about. I had no idea only 2,000 people lived there. And then what happens during spring break?
1.7 million people flood this island during
Are those
spring
numbers
break.
right? I mean, 2,000 to 1.7 million, that's just mind-boggling to me.
That's what the Tourism Bureau reports. I was really curious what a spring break destination, that says we love this, we want this, what they thought they really get out of it. So I called up South Padre Island. I spoke with their tourism board, and they can't get enough of spring breakers. So, it's just a pretty different approach. They really see the economic benefit from it, and, they welcome those spring breakers with open arms.
All right, can you just talk about some of the stuff that's going to happen on South Padre Island? The things for spring breakers who want to go there, what they get to play with?
Oh, yeah. I mean, so Miami Beach actually spent $250,000 to tell people not to come. South Padre Island spent $400,000 telling people to come. They make a big campaign. They want all the universities to come. They have a university week, battle of the universities. There's like tug of war, giant Jenga. This is all very alcohol fueled. There's huge concerts on the beach with famous DJs like Steve Aoki. They really just want as many people as they possibly can. Another funny anecdote that the guy from the tourism board told me was that it's pretty common. This is like a small island where people drive golf carts around. He said, oh, well, there's always golf cart crashes. And sometimes those rowdy teens, they drive the golf carts into the ocean. But, we just deal with
kids
it.
Being kids, I guess.
I want to know how giant that Jenga is. I'm looking at South Padre.
She's been talking about this Jenga all day, Anna. You know what's interesting, Carol?
Come on, you want to know. How big is
it's
it?
a big Jenga.
Right?
Yeah, that probably could hurt someone.
What were you going to say?
You yell Jenga.
It's probably pretty big.
Yeah, it's probably pretty big. I remember my parents telling me stories about spring break in Florida, and this is multi-generational in terms of spring break destinations.
Were they
I don't think they were going either. My dad, no. My dad was on the swim team, so he was always traveling for spring break too.
Tennis team, swim team, no spring break.
But I think there was a winter break maybe or something. Yeah.
Can I talk to Tom and really
Oh,
find
yeah.
out the
South
details?
Florida was a huge destination for spring break
Yeah.
for decades and decades, but people are really turning their backs on it.
All right, we'll see if this works. Okay.
Yeah, what's the other beach
Yeah,
that everybody
exactly.
used to go? Daytona? No. What was the beach?
Yeah, Daytona, Fort Lauderdale.
Fort Lauderdale?
Yeah.
Fort Lauderdale was a really big spring break destination for decades, and Miami Beach, and now some of the cities in North Florida still embrace spring break, like Daytona and Kansas City Beach.
Anna Kaiser, this is a great story. Florida correspondent, Bloomberg News, one of the most read on the Bloomberg. Thanks.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. 4:53 right now on Wall Street on a down day for the rest of the U.S. stock market. General Electric shares gained today. GE was up 0.9%. General Electric's aerospace division has set plans to return more of its profits to shareholders, including restoration of a significant dividend as it accelerates earnings as an independent company. Coming up on Wall Street Week with David Weston, he'll be sitting down tonight with GE CEO Larry Culp. BlackRock is going to acquire Spider Rock Advisors, a Chicago-based asset management and technology firm, to provide personalized investing strategies to wealth management clients. Spider Rock manages about $4.8 billion for family offices, investment advisors, and other clients. BlackRock up today by about 0.5%. Broadcom is predicting that AI spending will fuel growth more quickly than expected this year, even as sluggish demand in other areas weigh on semiconductor sales. Broadcom shares today did decline after earnings. Broadcom today was down by 7%. NVIDIA shares today also declined. NVIDIA among the chip stocks selling off today. NVIDIA was down by 5.5%. Gap shares gained after fourth quarter earnings exceeded expectations, a sign that efforts to turn the storied apparel retailer around are bearing fruit. The results come about 6 months into the tenure of CEO Robert Dixon, who was selected to turn the company around after years of abrupt management shifts and inventory mismanagement. Gap today up by 8.2%. And those are our top company stories at this hour. I'm Charlie Pelletin. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. That's Carol Master. I'm Tim Stenevec. Let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hello, Tim. The U.S. jobless rate climbed to a two-year high in February. Hiring was healthy and it pointed to a cooler and resilient labor market. Acting U.S. Labor Secretary Julie Su spoke to Anne-Marie Hordern on Bloomberg Television after that report came out.
The jobs numbers continue to be very strong. The 3-month average is actually 265,000. So, we look at trends as much as we look at monthly numbers. And on that, the unemployment rate remains under 4% for over 2 years now.
Acting U.S. Labor Secretary Julie Su says that is the longest stretch in 50 years. President Biden made his case for a second term during his State of the Union, frequently criticizing his predecessor, Donald Trump. Wendy Schiller tells Bloomberg the president managed to reach the right audience is exactly what he needed to do.
He, in the end, had a very enthusiastic response from key players in the progressive wing of the Democratic Party. They stood up, they clapped, they looked happy with that speech. And that is absolutely essential for Biden, just as a baseline, to be a competitor and be competitive with Donald Trump in the 24 election.
Brown University political science professor Wendy Schiller. A ship carrying humanitarian aid is preparing to leave Cyprus, headed for Gaza, after international donors launched a sea corridor to alleviate the humanitarian crisis after 5 months of war. President Biden said in the State of the Union last night that he ordered the U.S. military to create a temporary port on the Gaza coast, and he used his speech to call on Israel to let in more aid. But U.S. officials say it would take weeks to build that facility. The European Union, along with its partners, including the United States, are set to launch this aid corridor as early as this weekend. Israel says it welcomes the maritime aid, but cautions that it also needs security checks. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Back to Bloomberg Business Week with Tim and Carol.
All right, Amy Morris, thank you so much for that. Getting ready to wrap up on this Friday and wrap up the week. In a week where, man, a lot going on between Jay Powell's State of the Union, Super Tuesday, do you remember that? New York City Community Bank Corp,
Everything that happened in China?
Cash infusion.
New York Community Bank. I didn't even mention that with David Weston earlier.
A ton of stuff going on, and I'm looking at, a market where the tone, a lower tone here on this Friday as we get ready for the inflation print next week.
Yeah, I guess there was some speculation maybe that a rally to multiple records this year is perhaps overdone. That's what our markets wrap is writing about. When investors were wrapping their heads around a mixed jobs report, weakness in the S&P's most influential group weighed heavily on trading. We actually saw tech come under pressure today.
Yeah.
The NASDAQ 100 down 1.5%. NVIDIA halted a 6-day winning streak.
What do you think the NASDAQ is up this year? And what do you think the S&P 500
I think the
is up
NASDAQ,
this
I think
year?
the S&P's up 7.5%.
You cheated.
No, no.
Well done.
Is that right?
Yeah.
I think the NASDAQ is up 8%.
7%.
Oh, I'm so close.
For the year.
That's the 100.
To be fair, yeah, let me just pull up the Russell because we like to talk about small caps.
How's it doing?
They're up about 2.7%. And what do we see on small caps? Today, they were down barely, a little bit. So in terms of what we saw from the other major equity averages, small caps were a little changed.
Almost 35% surge in the S&P 500 since the start of last year.
All right, more importantly, so it is International Women's Day. Just give it to me. I have a few more hours left. Having said that, if you missed any portion of our conversation with Kathy Wood, of course, founder, CEO, CIO of ARK Invest, you can catch it on our weekend show, which will be airing tomorrow on Bloomberg Radio at 8 a.m. Wall Street time, and it's also on our podcast feed.
Are we going to have all of it in there?
Most of it, thanks to our incredible team who make it all happen. Speaking of that team, our thanks out and a shout out to Meredith Frank, Juan